good afternoon, everyone. This is Alan Adler. I am the Midwest Bureau Chief for FreightWaves. It's great to have you with us today for the inaugural kickoff, first ever edition of Truck Tech on TV. This is an extension of what we do on Fridays here at FreightWaves called Truck Tech, the newsletter. And we are thrilled to have a new platform and a new way to explore some of the technology, autonomous electrification, that goes on in the trucking space. What we'll do here is you'll see some carryover from the newsletter and some expansions here and there. It will go back and forth, but it's not a repeat, because what we've got scheduled here every week is the opportunity to talk to someone, a newsmaker in the industry. And we're thrilled today to start out with John O'Leary, the CEO and president of Daimler Truck North America. He'll be joining us in just a few minutes. I want to hit some headlines, which will be another feature of what we're doing. So why don't we get started with that? CES gets underway tomorrow in Las Vegas, and the folks out there are hoping to see those big crowds come back after a couple of years of an entirely virtual show, and then last year a pretty muted crowd as we went through the second year of the pandemic. Now we're looking at, hopefully, at least for the organizers anyway, an opportunity to see those 100,000 people or more. Trucking is got some roles out there, but nothing major. Like back in 2019 when Daimler Truck really took over the show, quite honestly, and had a lot of news. There's really no truck maker doing that this year, but there are things that are happening. Gatik, for instance, the middle mile company that works with Walmart and a number of other Fortune 50 companies on basically site-to-site autonomous, is showing some technology, proof of concept with Goodyear on some tire technology. That's one thing that's happening out there. The transportation does get its own pavilion at CES, and there would be a lot of things that wouldn't be necessarily applicable to what we're talking about. The partnership with Goodyear and Goodyear is an investor in Gatik, is very similar to something we heard about a couple of years ago when Kodiak Robotics and Bridgestone America is tied up. They too are working on technology to improve the autonomous operability, and so we'll get into that a little bit more. You can look for a story on FreightWaves on that on the Goodyear Gatik partnership a little later. We also see that Nikola, despite its attempts to stay out of the news in some ways, is back in the news. They're selling debt directly to a group of investors. This is to raise $50 million. They'll get about $46.5 million of that. And their hopes is to, what they need it for is to shore up the balance sheet. And they have a lot on their plate. They've got to finish the second phase of the plant in Arizona. They are continuing to build battery electric trucks, albeit at a slower rate because of some setbacks that they took in the merger or acquisition of Romeo Power. And ultimately, they want to start working out and building the hydrogen hub and their hydrogen stations to fuel the fuel cell trucks that are coming later this year. More on that in Friday's newsletter. That's how you'll see things start to play out a little bit here. Finally, NHTSA out with recall numbers for the year of 2022, and two truck companies, unfortunately, made that top 10 list. Daimler is in at number 3, same position they were in a year ago, and Navistar finished number 9. The big leader for the second straight year was Ford Motor Company. A little bit more again on Friday in the newsletter on that. Now, let's get to what we really came for, which is to welcome John O'Leary. John, the president and CEO of Daimler Truck in North America. John, it is wonderful to have you as our first guest. You came to us from Portland today, I believe, and it's wonderful to have you. Happy New Year to you. John has been in the CEO role at Daimler since, I believe, April of 21. Prior to that, he was working in Germany and helping reset the Mercedes-Benz truck business. And prior to that, he was the chief financial officer for about a dozen years here in North America. So, John, it's great to have you. There's so many things we could talk about, but honestly, we're going to stick to one, which is electrification today. I guess just to get started, maybe you can talk about where electrification fits in the pantheon of what you do as the market leader here.
Yeah, Alan, and first, let me say thank you. It's an honor to be here as your first guest on this new venture. Really exciting and a great way to start out the year. So thank you for that. I'm honored, and of course, DTNA, as a reflection of myself, we're just honored that you consider us to be a thought leader in this space and that we're here. Yeah, so, when you talk about electric vehicles, we're a big company and we can do a lot of things at once. Certainly, we're continuing to develop our diesel products and we lead the industry there, and we fully intend to continue doing that up until at least 2039, which is what we've said we're going to do. At that point, we then switch to CO2 neutral exclusively. But the electric products, yeah, well underway. Obviously, there's been a lot of press out there in recent months about deliveries that we've made to customers. So again, very nice acceptance by them. Demand is there, not it's still a small part of the overall pie, as you well know, the overall North American truck market, but it's certainly on a ramp up path, and we're dedicated to that. We're spending a lot of money there. But again, it's still for us a relatively small piece of the overall pie.
Yeah, of course it is, and I think I have to ask though: are we seeing? I mean, obviously, we are responsible for some of this. We spend a lot more time writing about electrification and, in some degrees, autonomy and things like that. Things that are coming more than we do things that are here. Your business is primarily a diesel business today. How does this actually ramp up in your mind, John, as we move forward? I mean, what do we see, sort of a hockey stick that we've talked about, or do you see it more gradual? You have one order out there of 800 e-Cascadias from Cisco. Are we going to see more of that?
Yeah, I mean, for sure, there's a lot of ongoing discussions with customers. As you know, we sell trucks to the very largest fleets in the country, as well as to some smaller and medium ones as well. And there's a lot of interest out there about electric. Everyone is wanting to at least understand the technology. Some of them are taking it a step further, dipping their toe into the water with small orders. And then with Cisco, for example, you saw a rather large one. But yeah, there's a wide variety of business going on right now, discussions as people really try to sort out their game plans for the future. It's definitely something that you're going to see move forward with. Whether it's a hockey stick or a more kind of a gradual ramp up really depends on a number of things. Infrastructure being first and foremost. Right now, there's not so much commercial vehicle infrastructure out there. There's a lot of initiatives underway. We have a joint venture with BlackRock and NextEra Energy. There's other things going on with other players in that space to really try to build that out. So in the meantime, depot charging is really the way to go. And, we'll see that develop over time. There's also a TCO equation, right? Nobody buys a truck other than to make money with. It's a tool to make money in a business context. So the TCO has to be there. And so from that perspective, government funding on incentives, super critical. And like I said earlier, also on the infrastructure side.
Well, and if you go back even to I guess it's late 2018, really, when you first delivered an electric e-Cascadia down to Penske and to NFI for your original experiment, those were subsidized. And we continued to see subsidization. I think we wrote recently that the Nikola fuel cell, which we're not really talking about fuel cells right this minute, but could get up to 70% in acquisition cost voucher, kind of thing. It could run that high. How long do we need to have, in your estimation, an incentivized balance, if you will, patch to TCO?
Yeah, that's really the big unknown question, I would say, Alan, at this point in time, because there's definitely a ramp up phase where you're dealing with higher cost batteries, higher cost e-components, things like that go into it, that have not been industrialized. If you look at a North American market, class 6 to 8 of 425,000 trucks, that's a lot of volume that drives down cost of every component for every OEM. That electric piece of that is nowhere near that now. So there's still a lot of volume that has to kick in in order for that commercialization to really get to a better cost place. So, and then you get into the whole scarcity issue too of certain pieces of that supply chain. So it's still a ways away. I would say there's no danger of the need of government incentives to go away anytime soon.
Right, and you're actually just got some more with the Inflation Reduction Act, another potentially $40,000 per unit. I would suspect that would accelerate things a little bit, or allow people that might have been doing 1 and 2 trucks to do 5 and 10 or something like that. Is that something you see happening?
I mean, it helps. Every little bit helps for sure, but still, the issue with infrastructure is a big deal out there. And again, depot charging in some locations, for example, California, fairly quick to be able to put that in. They've been working on it for a long time. I've thrown a lot of money at it for a long time, and so they're a little more prepared than maybe the rest of the country, or at least most of the rest of the country. So you'll see definitely some spikes up there. But yeah, it's still, there's a lot of limiting factors in play.
Yeah, well, you've mentioned infrastructure a couple of times, so let's talk about that for a few minutes. I think that you mentioned the it's $650 million, I believe, that was the number associated with your work with BlackRock and NextEra. I presume that, and we've been showing some pictures of the B-roll, if you will, of your electric island there in Portland, and I think that must be part of this, because you also late last year sort of celebrated the coming of megawatt charging, which of course we don't have trucks capable of that today, but something that will happen at some point. I guess my question for you, and boy, I hate the cliche so much, but it did become the chicken and the egg, right, of trucks and charging. I remember when you took your first trucks down to California, I think I was told that they had to stop at car chargers and kind of go all night just to get enough to keep going. Things are a little better now, but where do we need to get to, and do we need the same level of of incentives for this infrastructure that we're seeing on the vehicle side?
Yeah, so maybe just to start out, one minor correction. Electric Island, we actually did that long before the Inflation Reduction Act came out. So that was totally funded by ourselves and our local utility, PGE. So that was something that, again, you recognize the chicken and egg concept. We realized we needed that here to be able to not only use for our own test fleets, but anybody else around here who might want to dip their toe in the water with a commercial vehicle. So just a minor correction on that. But yeah, it's definitely gotten to the point where infrastructure is key. That's why on the BlackRock NextEra topic or joint venture that we just talked about, we've got basically lanes on the East Coast, West Coast, and then the Texas Triangle mapped out for areas that we really want to develop, understanding that at least initially there will be fairly strong demand in those places for electric vehicles. And again, it's really with the intent of trying to do some of the longer haul applications and have charging capability there. Certainly within cities today, in certain cities where it's more of a regional day cab or last mile delivery, those applications already make a lot of sense for electric, and you're starting to see some offerings there. We'll be launching our EM2 a little bit later this year to address that. We've got our MT50 Freightliner custom chassis, which supplies to people like FedEx and UPS. And so you'll see that as well, or you already see that as well. So anyway, we're trying to help out wherever we can, but understand that we don't have, nor does any other single entity have the capability or the resources to really build out an entire grid across the country. And again, that gets back to your point, which I think is a good one, that continued help from the government to develop that, I think, is necessary and greatly appreciated.
Yeah, let me ask you a little bit about retail. I don't know that there is a story on electrification for retail at this point, but do you envision a time in the near term where you would see a stock unit, I'm guessing, in your stores, in your retail outlets, to encourage more of this? Are you doing that already? There's not many stock units of any kind available these days, but do you see those going to stock at some point?
Yeah, I mean, at some point, I would say that could be a logical outcome. Certainly, in the meantime, the specificity of applications probably prevents that, at least in some, or let's say most markets. But again, we're a very customer focused company. Our dealers are very customer focused, and if there's a need out there, we're going to try to meet it. Just as we always have with all of our other products. So if there's a market in a specific AOR or a specific region or for a specific application that lends itself to stock units, then for sure we'll develop that as a program and support it just like we do with our diesel stock trucks.
Right. Do you differentiate? We were with Martin Dahm at the IAA in Germany, and he was pretty clear that this idea of truck as a service is not your model. That is not how you do it. It is how one of your competitors, Volvo Truck, is doing it with their gold package, basically taking care of everything. You offer all these services, but how is it that it's different? Can you help me understand the approach?
Yeah, I think there might be a little confusion there. I wasn't at IAA to hear Martin say what he said, but as I understand it, the context was more along the lines of, we're not going to get into the trucking business. There's certainly people out there who say, well, maybe a logical extension is that you kind of cut out the middleman and just go and become a direct freight delivery company. And that is clear in our minds, Martin's mind, mine. We would never do that. We have customers that we respect, and that respect means that they can do it a whole lot better than we can, and they've been doing it for a whole lot longer than we have. So we have no intent to enter that space of delivering freight. In terms of bundling services, which I think you referred to with Volvo, we certainly would do that. We're developing it right now. We have a financial services company, Daimler Truck Financial Services, who are very involved in looking at those opportunities right now. I would say, at least at this point in time, the demand for that is not so significant. But again, we like to read the tea leaves and be innovative and be prepared for the future. So if it turns out that becomes a big need or want from customers, then for sure we'll be ready with products and offerings there.
Yeah, we're getting into a period now, and it's really, we'll see some numbers, later today in terms of how the year finished out in truck orders. But we are getting to the point now where, battery electric trucks are for real. I mean, you're doing it, you're building them there in Portland, you're delivering them to customers, and those announcements came, pretty quick succession late in the year. Do you expect, if we get, and maybe I should ask you the question, if you expect a pre-buy in advance of some of these emission regulations that are coming for 24 and 27. If you see a pre-buy, do you see some of the expected pre-buyers sort of take the plunge and purchase electric trucks to maybe, help with some of the offsets? Obviously, the more zero emission or zero tailpipe emission trucks you run, the more room that gives you for continuing to run a diesel fleet. How do you see that? And do you see an inflection point, I guess?
Yeah, I mean, for sure, that's possible. I mean, it's still a long ways off, and I would say even the regulatory environment that we are in today, there's no guarantee that that's going to be the same regulatory environment in 12 or 24 months, right? The regulators don't just pass a regulation and then take the rest of the year off or the next 2 years off and go golfing, right? They're working on the next set. So we're not exactly sure what that will even entail, and certainly we try to keep our finger on the pulse in a big way. But yeah, just as you highlighted, people, our customers, ourselves, we are constantly reading what the regulations are and what they allow you to do and how to best navigate those. And if that involves pre-buying electric vehicles or pre-buying diesel vehicles, that's the kind of behavior that you can expect from customers. And certainly we are there to support our customers.
Well, and you've certainly seen it in the past. I mean, every time we've had a significant emission change, we get some level of pre-buy. It makes it even more confusing in the environment where we still have, is it 80,000 or 100,000 units of sort of pent-up demand? Maybe that's fallen a little bit recently. Your folks track that much more closely than I can. Let me switch gears a little bit. It's still electrification, but it's fuel cells. You have a couple of plans that you've talked about. Last May, you announced a partnership, if you will, with Cummins, which is a partner already in engines, to basically use Cascadias, not e-Cascadias, I don't think, but Cascadias to host fuel cell trucks. Can you bring us up to speed a little bit on what's happening there? And then maybe I'll ask you about Cellcentric in terms of timing later.
Yeah, so at least at this point in time, there's a lot of let's say feeling out of different suppliers and OEs to figure out what is ultimately going to be the technology of the future. And certainly in fuel cells, you've got a couple of different avenues that you can go there with gaseous hydrogen and direct injection versus fuel cell. And so we understand that our customers are going to have different needs. Just like today, we offer a Cummins, of course, it's all diesel, but we offer a Cummins and a Detroit. And certainly as we look to the future, we would want to be able to serve the needs of our customers and whatever requirements they have. So we've got a great partnership with Cummins. We have for a long time and really are happy to have this opportunity to develop and innovate with them. Just as we are with Cellcentric, which is more of a proprietary or at least a internal and of course shared with Volvo opportunity. And I guess you'll ask me about that next.
Yes, I will. We had an opportunity to ride in the Gen H2 when we were in Germany, and it's a pretty special. I guess the surprise to me was that it's really a parallel hybrid because it's got a pretty good sized battery in there. And ultimately you're sort of toggling between the two to decide which is best used. Are we still looking second half of the decade for that to come here as a vehicle, or do you think you could move that forward, or would there be a need to bring it forward?
There's just as we had the earlier discussion on battery electric, there's a lot of the same factors in play, such as infrastructure and TCO and things like that. I would say at least compared to Europe, where on the battery electric side, we're kind of at parity in terms of the development of products and the timing and things like that. I would say with hydrogen, the U.S. is maybe a few years behind Europe in terms of where the thought process has been on that as a viable technology going forward. So it's still somewhat early days. It's obviously accelerating, but it's certainly a few years behind Europe. So I would say your timeline there is probably not too far off. It's very general, of course. And a lot of things have to happen, again, specifically with regards to for infrastructure and TCO. But at least at this point in time, the expectation is that for longer haul types of applications, there's going to have to be some hydrogen solution out there. But again, there's a lot of companies out there, startup companies innovating battery technology all the time. And you never know what's going to happen, in the next 2 to 3 years. But at least the crystal ball at this point in time would say that we're going to need a hydrogen offering towards the end of the decade. Yes.
Sure. Okay, crystal ball time. You brought it up. I'm going to pick up on that one, and I'm going to ask you, as our first guest ever on Truck Tech, I'm going to ask you for your best prediction on 2023. And you were told in advance this was coming, so you can't be too surprised that I would ask it. But I am curious, John. I mean, you see the whole picture really of trucking in this market. What's out there. What are we going to see this year? What's your big prediction?
Yeah, and actually, Alan, this is a pretty easy one to answer because it's the one I get asked the most. So whether it's by my boss, by our outside board, by customers, by everyone. So I definitely have an answer pretty much in my head at all times. Look, the demand that we saw out there for 22 that none of us were able to fulfill, that will continue in 23. There's a lot of customers out there, especially in the large fleet space, whose average fleet age has crept up. And what that does is raise their operating costs, and they don't like that. They want to operate in a bandwidth that they're far more comfortable with. And so they want to get into younger product, and they have the capital to do it. And we've had so many discussions. It's the first question I ask every single one of the CEOs whenever I meet with them, and they're all very, let's say, committed to make those buys this year, regardless of what the economic headwinds may look like that we sometimes see on the daily press. So I think that will continue. Obviously, anything is subjective to some economic meltdown of epic proportions that nobody's talking about. But I would say that's a pretty strong leg I'm standing on right now. I would also say on the vocational side, because of infrastructure bills having been passed last year, that market is also going to be very robust. So at least from where we sit right now, the year is going to be just as strong in 23 as it was in 22. We do expect some better performance from the supply base. We've seen the chip side of that gradually improve to where it's far less. It's not completely gone away, but it's far less of an issue than it had been in 22. Of course, we've got other issues at various times in certain parts of the supply chain with things like tires and brakes and frame rails and things like that, more standard type parts. But we know they're working hard on that, and we're helping them work hard on that. And so we would expect some better performance from the supply chain as well. And then I guess the other thing I would say, since your topic today is more on zero emission vehicles, for sure that ramp up will continue. I think from all of us. Of course, subject to the infrastructure development, trying to keep pace with that. Because I think a lot of people, as they've started taking deliveries of battery electric trucks, at least what I hear about ours is, hey, we absolutely love these trucks. Now, if I could only get infrastructure, I could buy a whole lot more of them. So that's still a pacing item and will be in 23.
John, this is terrific. Thank you so much for coming on, being the first guest. You'll always be our first guest because we will never have another one. But next week, we'll hear from Rebecca Brewster at the American Transportation Research Institute. For everyone watching, thank you for being here, and so long for now.